That Italian debt raising everyone was so worried about went off like a dream. The money was raised and at lower interest rates than a few months ago. But it wasn't reflected on global markets. Australia's All Ordinaries Index fell almost 0.5%. It's because there's so much more to worry about. For example, the European Central Bank said banks are parking more money with it, a record €452 billion, so they're hoarding cash, afraid to lend. Then there's tonight's Italian bond auction, which relies more heavily on foreign investors. And by the way, Italy needs to fund around €450 billion in 2012, so keep those antacid tablets handy. The 3-month Libor rate, the rate at which the banks are doing business with each other, has been rising as well, suggesting a higher level of mistrust in the financial system because of banking exposure to those debt-laden Eurozone countries. The euro continued to come under pressure. It touched a new record low against the Australian currency. Pretty soon you'll be able to buy a Mercedes-Benz for the same price as a Hyundai. The global concerns were reflected in resource stocks. The retailers continued to struggle, but some of the banks found support. And Super Ratings has released some numbers. They're estimating the average superannuation fund performance to edge higher this month, but returns will fall this year. This graph shows that balanced funds have delivered positive returns for 5 months of this year so far, with October making a huge difference. Returns in December have been positive for 23 of the past 30 years. This year's so close, tomorrow's market performance could make all the difference this December. And that's finance.